Iraqi Dinar today. Latest news: the global currency community is currently observing an extraordinary period of intense activity, moving beyond the usual realms of speculation to focus on a concrete, high-stakes development. This narrative, specifically centering on the Iraqi dinar, has captured the attention of market watchers worldwide, suggesting a potential monetary shift that could significantly re-rate certain foreign asset positions. The unfolding situation is described as a potential reshaping of wealth dynamics, which few outside of closed financial circles had genuinely anticipated until this moment. As the international fiscal calendar draws near a key weekend deadline, newly emerged information appears to lend substantial weight to long-held hypotheses among currency analysts that previously lacked verifiable data points. A palpable sense of anticipation defines the current market climate as the financial world approaches what many are now calling a definitive point for long-awaited currency adjustments. Central to this narrative are confidential disclosures purportedly stemming from a highly placed source within the United States Treasury Department. These disclosures speak of an urgent reevaluation of the Iraqi dinar's rate, which has allegedly received official authorization from the highest levels of the U.S. financial authority. The gravity of this information is underscored by reports suggesting an activation protocol is slated to commence before the global financial markets conclude their trading week this coming Sunday. Crucially, this development is not being presented as another typical market whisper or a rumor circulating among retail investor groups, but rather as a verified, actionable movement originating from one of the planet's most strictly controlled and influential financial entities. The potential repercussions of such a significant rate change, should the reports prove accurate, are projected to extend far beyond the holders of the Iraqi dinar alone. The shift is anticipated to have a direct, material impact on the positioning of investors holding the Vietnamese dong and Zimbabwe's bond notes, marking an intertwined turning point in the broader international revaluation process. The unfolding narrative suggests that the financial world is currently witnessing the tangible progression of a transition towards monetary systems backed by real-world assets. This systemic change carries particular significance for individuals involved in what is commonly referred to as Tier 4B processes, or those holding certain types of exotic or historically undervalued currencies. The information being circulated emphasizes the immediate nature of the timeline, with the approaching Sunday being highlighted as a final threshold for this specific operational phase. The urgency conveyed suggests the window for this initial movement is closing rapidly. Late on Thursday evening, following several days of intense market speculation fueled by fragmented intelligence reports, a pivotal document reportedly surfaced from an official at the mid-level of the U.S. Treasury. This alleged document was quickly and successfully verified by multiple independent analysts specializing in foreign exchange forex and macroeconomic sectors. The document is believed to provide the first hard evidence of a United States-sanctioned emergency adjustment to the exchange rate of the Iraqi dinar, moving the situation firmly from the theoretical to the operational. Internal timing memoranda, which are said to be circulating across a number of major interconnected financial institutions, indicate that this revaluation is scheduled to become visible on interbank trading platforms and specialized contract-level screens before the global Forex window officially closes for the weekend. What analysts find particularly notable is the clearly calculated coordination between internal U.S. Treasury systems and major institutional banking hubs, with specific mention made of global financial giants such as Wells Fargo and HSBC, suggesting a synchronized process. Further details describe proprietary test simulations that were reportedly conducted late on Thursday. These simulations displayed temporary valuation figures for the Iraqi dinar, internally climbing past the $4.13 mark on systems used solely for the processing of high-level contracts. Though these test environments are strictly inaccessible to the general public or media, their execution is reported to have triggered automated back-end alerts and activated significant internal fund movements across platforms linked to specific, designated investor groups, signaling an event nearing completion. Despite the fact that public officials continue to maintain a posture of absolute silence and no formal, direct statements have been issued to the general media, analysts are interpreting these coordinated back-end signals as pointing to an undeniable operational conclusion regarding the currency's status. The prevailing expert sentiment suggests that the entire process has transitioned decisively from a speculative theory into an active, operational reality, with the revaluation now widely viewed not as a hypothetical possibility, but as an imminent certainty that is already being processed within the digital architecture of the global financial grid. Current indicators discussed within these informed financial circles suggest a critical window measured in a matter of hours rather than weeks. This compressed time frame naturally leads many observers to question the specific timing and the underlying rationale for initiating such a monumental currency adjustment, with virtually zero prior public announcement before the Sunday market closure. The explanation for this speed and secrecy appears to be rooted in a complex convergence of pressing international economic demands, strategic geopolitical arrangements, and a major, necessary recalibration of global liquidity occurring away from the public eye. Initial reports suggest that the central banks aligned with the G7 nations are actively preparing for an extensive, coordinated liquidity reset. They have reportedly agreed upon a plan to rebalance several key currencies that have been officially classified as undervalued or suppressed before the start of the third quarter reporting period. This move is not isolated to Iraq's currency alone, but is understood to be part of a much wider, orchestrated global realignment, specifically designed to underpin and support asset-backed valuation models on a worldwide scale, introducing value based on tangible assets. Moreover, confidential negotiations between the Iraqi Prime Minister, Mohammed Shia al-Sudani, and high-ranking United States economic representatives have reportedly culminated in a firm, mutual understanding concerning the forward trajectory of the dinar. The information suggests that in exchange for a favorable restructuring of Iraq's substantial international oil credit obligations, the United States agreed to provide support for a dinar rate adjustment before crucial oil settlement deadlines arrive over the current weekend, aligning political and economic calendars. Additionally, it is reported that advanced Treasury deployed AI-driven surveillance networks detected irregular and significant capital movements between financial institutions in Iraq and the UAE. This activity strongly suggested that private Tier 3 funds were already shifting their positions in anticipation of an imminent large-scale rate change. This sudden preemptive activity created immediate systemic pressure as the financial system faced the risk of destabilization caused by growing valuation distortions if a prompt, controlled adjustment was not quickly implemented. While the Iraqi dinar remains the primary focus of this unfolding event, experienced analysts are also increasingly turning their attention toward the Vietnamese dong. The dong has long been considered a parallel asset due to regional economic ties, and is viewed as a currency likely to mirror the dinar's trajectory. Despite enduring years of officially managed undervaluation, developments within Vietnam's monetary apparatus are said to indicate extensive preparation for a major currency correction is now well underway behind closed doors. In a significant defensive maneuver and preparation for the foreign exchange turbulence that typically accompanies a major revaluation, Vietnam's central bank has reportedly increased its foreign reserve holdings, specifically regarding U.S. dollars, by nearly 19% within the last month alone, Furthermore, there have been confirmed reports of temporary rate flashes recorded on specialized Forex terminals at major institutions, including TD Ameritrade and Bank of America. These momentary displays hinted at internal testing of potential valuations near 5 cents against the US dollar, an unmistakable signal for those monitoring the data feeds. Experts, including macro strategists, are projecting that the Vietnamese dong will closely follow the movement of the Iraqi currency within a very narrow time frame, potentially hours or days. Given Vietnam's increasing integration into broader global infrastructure and energy networks, a material shift in the dinar's valuation is seen as having the capability to pull the dong upward almost immediately in a synchronized regional economic event. This simultaneous positioning across two distinct markets underscores the coordinated nature of the transition now in motion across the global financial sphere. One of the most surprising and logistically impactful developments discussed in this extensive update is the sudden, widespread reactivation of specialized redemption centers for Zimbabwe notes across the United States. Verified internal human resources documents from a Tier 1 banking institution reportedly show that over 42 metropolitan zones have been reinstated to a state of full operational readiness for these specific bond note redemptions. This marks a substantial logistical escalation for what are described as humanitarian, project-based redemptions, a level of preparedness not witnessed in recent memory. It is important to understand the unique nature of these specific transactions. Unlike standard foreign exchange, these particular bond redemptions are described as not yielding direct cash payouts in the traditional sense. Instead, the narrative clarifies that holders will receive structured funding allocations strictly tied to approved humanitarian or infrastructure programs. These programs are overseen jointly by the U.S. Treasury's Strategic Development Office and various international regulatory bodies, emphasizing the fund's specific, mandated use for global improvement. For the first time in many years, experts from multiple, distinct financial disciplines appear to be converging on a single, shared conclusion. The world is actively transitioning through an unprecedented monetary shift. The widespread consensus among these diverse sources is that the event is no longer a speculative theory, but represents the active implementation of a long-term, carefully planned financial strategy. This convergence of analytical viewpoints significantly adds weight to the idea that systemic necessity rather than random market fluctuation is driving the current pace. Reports from the Gulf Currency Review also indicate that designated redemption centers in more than 15 states have already entered second-level processing. This procedural step is reported to occur only when live currency conversions are actively being logged within the secure, internal financial systems. Taken together, these various independent insights reveal a clear truth to those monitoring the situation closely. Whether or not an official public announcement is made immediately, the underlying global financial system has already begun to transition into this new phase, operating in what is described as a quiet but fully active revaluation environment. The practical guidance emerging for individuals who hold these specific currencies strongly emphasizes that this moment calls for proactive preparedness rather than passively waiting for a public statement that may only arrive after the fact. The next 48 hours are being characterized as critically important, potentially setting a personal financial direction for years to come. Regardless of public announcements, the immediate and paramount priority must now shift to organization and verification of personal assets to ensure absolute readiness for the complex opportunities that may arise in this rapidly shifting landscape. The initial step in this essential preparation involves the physical verification of currency to ensure it fully meets all valid issue requirements for redemption. For example, holders of the Iraqi Dinar must confirm their notes are from valid, post-2003 issues, as all older notes are typically deemed invalid for inclusion in this process. Similarly, holders of Zimbabwe notes are advised to meticulously confirm their assets are legitimate bond-type issues and not expired bearer checks. This foundational physical verification is crucial to preempting any logistical hurdles concerning asset authenticity once the processing window opens. Finally, amidst this volatile period, it is absolutely crucial for all holders to maintain a high level of security and vigilance against potential fraudulent activity. No legitimate financial institution will ever ask for upfront fees, request wire transfers to unlock redemption access, or solicit sensitive financial details via social media platforms or unsecured communication channels. This paramount warning must be strictly observed, as the heightened excitement surrounding revaluation events historically attracts unscrupulous actors seeking to exploit the uninformed. Security and skepticism must be maintained at the highest level, treating any request for payment in exchange for access as an immediate and definitive red flag.